everyone. Welcome to Gateway Open Office Hours. It's Friday. Thank you for joining us. This is going to be an awesome episode. I'm here with Carter Laren, my co-founder, and our live studio audience. Again, thanks guys for showing up. We are here today with Poseidon Asset Management with Emily and Morgan. These guys are probably some of the best, most well-known venture capitalists in the cannabis space.
Very
Lots
active.
of awards.
And very early.
Yeah,
Right,
yeah. So we're kind of we're kind of riding on their coattails. Like, you guys forged the way and are helping people navigate these waters, and we're excited to kind of dig into that today.
Yeah.
So thanks for joining us.
Thanks for having us.
Yeah, thank you.
Yeah.
All right, and for everyone watching, sorry for the little snafu with the intro, but hey, you just got more FaceTime with us.
Who knows what happened.
Yeah.
So can we start out by just like a really quick overview of maybe your backgrounds and how you got into investing in cannabis?
Yep.
For people who don't know.
Sure. So we're a brother-sister team, and we're expanding our team right now, which is really exciting. But if you're going to launch...
This isn't your parents expanding your team to more brothers and sisters.
No, we're running out of Paxias, so we've got to find people without... They will be taking the name, but no. So
It's a requirement.
We just adopted you. Thank you. No, so we... long story short is that our parents both died of cancer when we were really young. And so in 1996, a very brave hospice nurse mentioned to our dad, who was going through the litany of treatments and suffering from the various side effects from all of them combined, you might want to just try smoking some pot. That's what people said. They still say it, but we don't say that because we're industry professionals. But so he did not try it because of the stigma. We were in Buffalo area, New York, and so that wasn't really kosher. So to our knowledge, he never did do that. But prior to that, he had been an avid consumer and also a grower, but that was pre-children.
Did you know that at the time, or you found out later?
Never knew that. Yeah, we found out later. But he, there was evidence. He went to Woodstock. There are things that point to those things. And he had, he was kind of a wild man in a great way. So anyway, that kind of planted a seed where we view cannabis as a compassionate resource pretty much going forward, and didn't always laugh when people talk about it as like, oh, my back, I take cannabis. No, we actually think there's a lot of medical and health benefits to it. So fast forward to 2011, I was working as a consultant for a lot of large corporations who are always trying to increase their small slice in a very crowded pie of areas like, credit cards, mass media, fashion, consumer packaged goods. So working for those companies, really trying to get more and more of the pie, but it's so competitive and so mature and efficient in those markets. And then came out here to California and started to see the cannabis industry really starting to take a shape. And all I could see was the opposite of that problem, was all of this pent-up demand and not really enough products and services to really service that demand. And so called up my brother, as you do, and we started talking about how this could look to participate in this industry. And it felt like an altruistic and we felt like a potentially incredibly positive financial way to go. So
Morgan, you were bought in right away when she approached you with this idea.
Oh, absolutely.
Okay.
It was interesting because I came from more of a traditional investment background, and I've always been interested in investing since I was a kid. I bought my first stock when I was 12 years old, so it's just always been like looking at markets or looking at companies and just thinking about it in a different way. I was a math major too, so numbers and I get along for the most part. So. But when we started talking about the cannabis industry, especially back then, looking at just an industry in transformation or emergence, right, into a new marketplace, and just seeing a wide open landscape and understanding that so much infrastructure, so much capital would be needed to come into this industry to really build it out and support a regulated marketplace. And at that time, we just didn't see pools of capital moving into the industry yet, and we didn't see many companies yet. There was a very established black market, but those were not companies that really kept detailed books and records, or really thought about a cap table of investors and all these different things. So we basically saw this as a major opportunity to help accelerate or try to point the industry in a positive direction with capital, and that was really what it all started out from and what we're continuing on today.
So what were the first kind of investments you made? I mean, were they plant touching? Were they tech? Or what's your portfolio look like? Has it evolved, and what did it look like at the beginning?
Yep. So when we launched, we weren't sure about the risk tolerance of touching the plant for our LPs. So we slowly tiptoed into that, but we started with agriculture. Technology was one of the biggest areas because we just felt like there was a lot of inefficiency in the grows. And then we quickly knew that SaaS was going to be a really interesting area, and so that was kind of quickly where we started to expand into next.
We certainly came at it initially with that ancillary focus. We especially with LPs back when we first launched. It was a new idea really, as it was being a fund, and also just an education process, and also just from what we identified as some early areas of opportunity. So ag tech was certainly one of the forefront, and just kind of then from there continuing to kind of pull at the thread and see the different verticals as they were starting to emerge from an investable standpoint.
And did that change? Are you touching the plant now?
Yep, we are touching the plant, and actually our first foray into that was that we identified that a lot of growers or cultivators or stores who'd been running for several years, 10 plus years in some cases, needed expansion capital and couldn't acquire it through typical channels like your banking resources of a line of credit or short-term business loan. So we actually started working with some of those cash flow positive operators and doing short-term notes so they could expand their operations.
So I was going to ask, this kind of partially answers my second question, but your name suggests that you're not only venture, but you have alternate finance options for people that is not just venture debt, or sorry, not just equity.
Right.
What are some of the things? I mean, I know you've done equity investment. What are some of the other ways you guys have invested capital?
Sure. So, we really look at, when we look at the industry, there's this full analysis of not only just the sectors of areas that we think are very interesting, but then also what parts of the capital spectrum that we think make sense as we're building out our investments. So we've done anything from, as Emily mentioned, some of these growth capital via promissory notes, and then utilize some traditional structures as convertibles for some early stage and preferred equity. But we've also done even public equity financing. Okay. So we've really gone the entire curve, and we've done warrants and options, and building in other kinds of tools throughout our these different companies in different stages.
So when you say public equity, like private placement deals in public companies, basically, or just straight up buying stock in public companies on the open market?
Generally not open market.
Okay.
By and large, we really like to understand exactly what we're entering into, and so a lot of our public companies in the fund were before they were public.
Got it.
So I can only imagine, we slowly just look at startups, right? It makes it very simple for us as far as deal flow, and we still kind of get overwhelmed with the number of applications that come in. I can only imagine that the deal flow that you guys see, and on top of having a well-known name.
And being one of the first.
Yeah, it's just like,
right.
It must be overwhelming. So how do you do that initial filter where you're kind of, taking that huge pool and getting it down to something that's manageable?
Yeah. When we first launched the fund, it was a little bit more difficult because we'd kind of identified these key areas we wanted to focus on within the industry, kind of divvied it up. We thought kind of like the plant's in the middle, and then what are all these ways you can invest around the plant.
Right.
As the portfolio started to really develop, we started to think about what additions to the portfolio would be synergistic with the existing companies as well. And it's been great because a lot of our technology companies are syncing up and working together and cross-selling and improving operations for other companies. So now it's really about what aspect of the market are we feeling like we're seeking. And sometimes it's also about portfolio management and balancing. So if it's something that we've already got a lot of exposure to, unfortunately, it's something that we're generally like right away, sorry, this is not something we're interested in now, but keep us posted on your progress.
Right.
So.
If you can even imagine when we started, just the lack of data or of information on companies, on from valuations to growth pathways to, how do these companies really scale, and that's just all been building on itself, now for 3.5 years of working with companies in the industry, and now having established portfolio invested in many, many companies, it's all building on itself. So certainly at the outset, it was really hard because that funnel was massive, and the funnel is still massive, but at least, the exactly where we're still looking is a much more refined process, or not process, but refined as far as who we're really targeting still for the
And you
fund.
predominantly do, I'm maybe putting words in your mouth, so correct me, but is it predominantly seed stage? When you do equity investments, is it predominantly kind of super early stage? I know you follow on or that kind of thing, but it is super early.
Yeah. Do you want to?
How early
Sure.
is super early? What is that?
Yeah.
Well, it's changed.
It means different things to
Yeah.
investors than it does to founders usually, so I just
Yes.
want to
Sure.
clarify what that means.
I mean, the nature of the industry, it has largely been seed stage companies with outside of those expansion capital type companies that I was mentioning earlier. And we have done a Series D actually
Yeah.
with a very mature company that's been around for 10 years. But I don't know, in terms of what's early for us versus founders, what do you think?
Well, and it's evolved, right? I mean, especially in the first year and a half, or even 2 years, it was all just early stage because that was just what was
There
available.
wasn't much else.
Right.
Yeah.
And as time has grown and as the fund has grown, that opportunity set has expanded. So, really now today we're not necessarily looking for that. Certainly no pre-revenue. We're not looking for anything that there's got to be traction. There has to be some way for us to get a sense of product market fit or a little more development of the team. So we have by nature just pulled a little bit further in the life cycle of some of these companies. But we're at the same time we try to not be any set in stone. We don't like to say no, because
Right.
we think that's just a really dangerous word. It's either not yet or some way to revisit, or maybe it's still something of interest on these very early stage companies, because there still is so much opportunity, and we don't want to limit ourselves and shut out an opportunity. And same thing on the late stage, and that's why we try to keep a very open mind.
Where do you see the most opportunity right now in the industry?
I was thinking about that. I mean, one space that's just ripe to really get interesting is the industrial hemp side of things. It's been not talked about as much. We do have a couple of holdings on that side, and we have had others in the past. But I think that's a space that its day will come, and it's ripe for disruption.
Can you dive into that just
Yeah.
a little bit and kind of
Yeah.
unpack it? Like, where in industrial hemp are the opportunities?
Right. So right now we're seeing a lot of interest from the state level, which is really exciting. Like Governor Cuomo in New York just signed support in and funding in to support the research and development of industrial hemp, and it's now listed as one of New York State's commodities, which is really exciting. Yeah, I mean, being from a part of New York State that can be economically depressed at times, it's great to see these types of things coming, and just knowing how sustainable this crop is compared to so many others that we cultivate here in the United States. Very exciting. And we've seen that in Florida, Kentucky, other states as well. But the gap is that there are large corporations like clothing manufacturers that have mandates to be seeking more sustainable fibers and resources. And the process from getting the plant to those fibers that are actually workable, where people actually would like to wear them and it's economically feasible to actually integrate it into the clothing, it's a wide gap. And so there's a few steps that need to be filled in along the way and automated and improved upon. And I think it's really interesting because it stands to bring some textile manufacturing back into the United States, just for the fact of having this product here. So that's one thing. And then do you want to talk about the other interesting technical components of using industrial hemp, like carbon nanotechnology?
I'm like, well, which
Do
one?
you want to talk about the
Do you
numbers?
want to
Yeah, so the
Trying
big
not to be the oldest sibling.
the great thing, as Emily's saying, is that the acreage is really starting to go up exponentially for hemp grown in the United States, and that is such a major game changer for the development of more avenues, because there's something like 25,000 end uses, right? But what gets really interesting is when you start thinking about the really high value processed end of it, where you are talking about potential applications in battery technology from superconductive properties that hemp actually has. And there's universities in New York that are actually doing research on this with hemp. And one of the companies that we are involved in, is having that continuous discussion of what exact finished product are they looking for as a processed hemp that they can continue to do that research. But we're also seeing it on the plastic side,
Yep.
which is really cool.
Yeah.
And there's even been a lot of prototyping and beta with actual hemp plastic,
Yep.
which is so cool to see. When you think about we're both sailors, and there was just a race from California to Hawaii, the Pac Cup. And there was a boat that just set the record, and they said, they were very lucky that they made it all the way to Hawaii because, going at speeds that they were, you just are bound to hit something in the ocean because they're just so full of garbage.
Wow.
Containers, the garbage patch, just tons of, and so when you start thinking of better resources that we can utilize, such as hemp for plastics that actually has the ability to break down, or just has so much more of a recyclable element to it, it's just incredible. And we're right at this tipping point, we think, and especially that initial point is that processing and actually getting it into an end material that can then get finished into those applications.
I think most people think of hemp right now as like that shirt that you buy at a festival somewhere that's kind of not super comfortable.
Right, it's a little scratchy.
Right.
Kind of sucks. Yeah.
So, but what are the big uses for hemp now, other than those shirts at festivals? And then you've mentioned plastics. Like, you think plastics is the next. What are the other kind of big areas you think hemp could grow into?
I mean, I think that the refining process is getting there to where you won't know if you're wearing a cotton or a hemp T-shirt, and that would be, or a cotton hemp blend T-shirt. So it is moving.
So it could replace cotton in a pretty significant way, you think?
Yeah, and or supplement it, which would be great. And it's interesting. It has antimicrobial properties, which is great. I could imagine Lululemon would love to get their hands on that. All those stinky yoga girls, but I'm one of them. But so I think that that's something that's interesting, and I think the plastics could be really quick on the back side of that as well. So.
Yeah, definitely textiles is the leading market because there's just the demand is already there.
Yeah.
Where some of these other markets we have to develop them.
Okay.
And that's where like industrial hemp versus cannabis is very different. Is obviously there's already a massive demand on the cannabis side. On the hemp side, there's a much more of an education of developing markets.
It's cool because I don't view textiles as something that's been innovative in the past several decades. It's kind of a neat thought that hey, this thing we've been ignoring, actually there's new things happening.
Yeah, so that is
not just ignoring, actively blocking, right? Because there was a time when we were kind of working in that direction and we stopped.
That's true.
Yeah.
That's a good point. The nutritional side of it is going crazy. It was I don't know if you're like around. I feel New Year's they're always talking about diets and what people can do to be healthier and. There were so many articles about hemp and
there's a lot of hemp seed stuff happening more lately. Yeah, that's a good point. Not a lot of cannabis investors talk about hemp, which is one of the things that I think sets you guys apart, at least in my mind from the investors that we talk to, is that hemp is a big part of your discussion.
Think about it.
Whether or not you've deployed a lot yet in hemp is a separate issue, but yeah.
So I want to transition the conversation a little bit more towards the founder. You guys now have a portfolio. Is there kind of is there common characteristics that you've been gravitating towards with the founders that you've discovered?
Yes, there certainly is a quality of just incessant drive. This is an incredibly challenging industry because it still is very undercapitalized. So you are seeking entrepreneurs that are willing to put in just incredible amounts of time and focus. So I guess it's that drive of energy to get things done, but also I guess I just nailed on too is the focus element. Is because this industry has so many opportunities everywhere and people are always coming at you with another idea that could be great for your company and that could spin you off onto some tangent that is completely distracting and and then you've missed either key development or key sales or something. So we really like those that understand their business through and through and focus on it while understanding additional opportunities for the future, but that focus is really critical.
It's something that we've seen as an issue as well in this industry in particular because of exactly what you said. Sometimes.
Actually, I mean, that's an interesting question. Have you ever been guilty of like being attracted to something that was outside of the core of what your focus was?
You mean outside of cannabis?
Outside of just investing in cannabis, or like there's, I don't know, if you look at ArcView, it becomes there's the angel network, and then they're they put out these data reports and all this kind of stuff, and so it's like, have you thought of kind of growing outside of that, been attracted to it, or just like we're going to be laser focused on doing investing and providing them as much value here?
Yeah, it just requires so much work to do what we're doing and so much focus and energy that I think that, there have been a few things that have kind of pulled us up and we thought maybe we should look at that, but then, you look around and you think, well, who's going to do it? So, and what we're doing
have those
is
conversations often.
Yes,
Yeah.
exactly.
This week I think we had one.
But I think that for us, it is really staying focused, and part of running a fund is thinking about your investors all the time and thinking about the companies all the time and trying to make sure that that's all lifting up together. So I think it's really, and so we are thinking about, of course, what's next and what we could imagine being viable for what's next in the industry, but we do try to stay focused on what's now as well.
So you talked about some stuff that you like about founders, or some kind of common attributes. Any red flags you can that you want to share? Maybe you don't want to share.
Like
the
she
red
has
flags,
some.
but are there,
Deep breath.
I love all of our founders. So
they don't have to be red flags in your portfolio.
No, they're
obviously.
not,
They're
obviously.
outside.
Totally not.
no, they're not. No, seriously, we're very lucky with the founders we work with. I
Yes.
have so much respect for them. I think that one thing is there is a very fine line between having confidence and the confidence to carry through as a founder, and then when it crosses into arrogance and unwillingness to take a step back and reflect, and the humility to know when sometimes something is needed in the business that can improve what you're doing. And I think that trait is a potentially dangerous one for continued growth of a company and willingness to pivot and be nimble in an industry like this one. So I think it's a fine line, and it's really hard to know when that line is being crossed at times. And sometimes it's totally easy because you're just like, I do not want to do business with that person.
Right.
Yeah.
But I think that's, for me, one of the things that's a flag.
And know what you don't know is, the idea of you're not supposed to know everything. You're not supposed to do everything yourself. And so founders that are not either cognizant of what their skill set limitations might be, where they can have complements, or as they're thinking about team development, so going through that process of looking at a company and looking at who is on the team and what their skills are and how they're operating. Because the last thing, especially in these young companies, is those that are trying to be maybe too top heavy, or where they think this founder is everything on their own. There's just way too much to do, and that's the idea of creating a strong team to all work together and develop what we're trying to do. So I think that's a key element, and we can find that out in the due diligence process too. Is if we're asking questions and you can tell that they don't know the answer, but they're just trying to BS their way through it. It's a pretty key indicator that either maybe it's an arrogance thing where you just think that you can muscle your way through it, or there's other issues about. We just much prefer if I don't know. Well, let me get that answer to you. Let me get back to you. As such a much better way to have a conversation.
It's kind of self-awareness and honesty, basically.
It's true.
It sounds like.
Yeah.
It's knowing.
Yeah, I think a lot of our founders too, when we first met them, almost all of them had mentors that they'd already identified, and I think the fact that they had found mentors in their business and in their lives indicates that they're somebody that's constantly willing to learn and evolve. And I think that's, if I'm thinking about through lines, that's one
That's
I've
interesting.
noticed. Yeah,
Do you invest in single founders, or do you like teams?
we've done both.
Both.
Teams are great, but we've done both.
We've done both. Yeah.
Yeah.
It's and I think it could depend on the stage of the vertical, where it could, where it has been a single founder, and just understanding that dialogue of where does that eventually branch out to.
Right.
So let's talk about stages for a little bit, because being the stage of investment that you're seeing this major transition where a company's going from launch phase and kind of doing whatever it takes to get ready, and to going into that scaling, working towards the Series A, Series B. What are some of the pitfalls that you're helping these companies avoid? What are some of the key first hires that a lot of them are making? I don't know. I often reflect back. It's like, okay, you're a hustler, you got it done, but you really need to put in an operations person or a sales team and really kind of build out that next part of your business.
Mm-hmm.
So yes and yes.
Was that it?
No, but those are certainly major areas. Financial controls too. So whether it has to be, a lot of these companies are too small necessarily to have a dedicated CFO, but strong controller or outsourced financial support or something that that can tie in with that operations and sales. The whole team. Obviously, the financials are so important. Something we're just like endlessly beating the drum on is, where are you right now? Where are you in your projections? Where are you in your burn rate? What are your metrics? And just constantly asking that question, because if the whole company is not aware, that's when things really start slipping up. The burn rate will explode, or spending just goes into areas that are not productive in developing the company because it seems fantastic, but what does it really mean to the value of the company? So it's those are I'd say the three primary areas. If they're lacking in those already, those are the three that we're immediately going to address.
Yeah. It's so worth it to get the financials at that early stage, at least a sense of process in place, because once you start selling, then it gets even harder to fix it. So that's something that we've seen a lot, actually.
Well, and as you drive towards those next rounds of funding, then they're going to be a lot more metrics and data oriented than just trusting that the founder is a good guy or girl.
Yes. But I think, go ahead.
It's interesting. One of our companies, and I know this is a very well traveled mantra, but hire slow, fire fast.
Yep.
Mm-hmm.
And I think that's so critical as you're thinking about these key positions, because the turnover for early stage companies can just be, it's so disruptive, right? To spending that time of constantly having to pull people in and out and trying to find what that right mix is. There's this pressure to get people going and hired as quickly as possible, and if the fit's not right, it's just it just doesn't really add the value that you'd like to see. And there was a larger point around that, but
it actually costs value if you hire the wrong person. It's not
huge.
And it's pretty horrible.
Yeah.
And firing is a pain. And
yeah. I always think that Andy Grove's book. Oh no, I'm not going to remember the name of it. But it's really helpful in terms of.
I don't remember the name of it either, but I know what book.
You know it, but and he's on the front, and his building badge is still on him in his picture. It's really cute. I think sales and operations is the big thing right now, because a lot of the companies that we've got are getting to that point where it's now time to really scale and get the product out there. And so head of sales is really key, somebody who can actually implement and carry through a sales strategy. And then operations is definitely something that this industry, I think, is looking for in a lot of places.
I was going to drill down on operations a little bit, because we've seen the same need where there is no lack of ideas or enthusiasm. But there seems to be quite a lack of actual operators. And so we almost view a lot of this industry as, I would say, more execution risk and less innovation risk than a lot of other. There's some innovation risk, depending. Does that match your experience? You're more experienced than we are here, so.
Oh, I think that's really well articulated point about the exact kind of issue that we see a lot of companies facing. I think there's a lot of very brilliant big thinkers in this industry, and it's almost two ways of being, being a big thinker and being able to see the path that's out before you and how you have to go about it, but then getting into the minutia of how you execute on that and operate on that, I think is the difference.
I mean, that's kind of the classic two-person founding team for tech companies, right? The visionary and the operator, right? Who kind of travel. If you watch, even non-famous companies but successful CEOs, they'll often have a sidekick with them, and that just follows them to every company, right? Because they work together well.
I agree. Yeah.
Okay, so one of the biggest things that keeps coming up as far as problems in the industry is distribution. What are you seeing or hearing as far as people doing stuff in the space? Are you looking at the space? It's pretty complicated. I know a lot of it's just kind of hinged on the legislation and the kind of ever-shifting sands there. But where we see problems, there's obviously opportunity. And I want to know if you guys have placed bets there, or if you're seeing people start creating interesting things.
We have, yeah. It is a very key element of the industry, and that kind of comes back to the idea of the infrastructure needed. And California is a great example because it is such a massive and a very deep market. There's anything from massive production down to small batch production, and they all have to get through to distribution. So we did, early on, an investment that was more of a wholesale technology kind of platform to try to address that need. And it's interesting because so much with investing there's a timing element, right? About when is the market going to truly adopt it, and we were a little early on that because the market wasn't really there yet. Buyers and sellers, there was this inherent distrust to have just done through a platform. They liked the idea of having face-to-face or getting to see and touch, to really have confidence in what they were buying. And same thing for the seller. And there's this whole issue around cash too.
Yep. Yeah.
That whole problem.
It's hard to send cash online.
Yes. So there's that element. So, and then also, when we're looking at a lot of distribution existing, there was a bunch of small groups, or they were trying to go around with like a limited number of SKUs that they would try to push door to door. And, when you're thinking about a market size of, multi-billion-dollar market, distribution is something that's very interesting to us. And we did recently invest in a company that is addressing kind of this the Northern California small batch farmer aggregating a very widespread network and helping them with solving their distribution pain points, so that they're not having to own the whole life cycle from growing all the way through to selling. They just have to focus on what they do best, growing, and then they're able to outsource the rest of that process. And I think that's is a very interesting element here in California, but every state is so different in how they're setting up their regulations, and alcohol seems to keep trying to get their hands on that element of it. So
Nevada being a prime example there. Yeah.
Exactly. So and look what happened.
Right.
Mm-hmm.
So and so much of this industry is still is very much driven by how regulations are unfolding, and then how do the investment opportunities create around that.
Are you kind of sitting back slightly to see how regulations are going to actually congeal a little bit more in California before you place a bet? I'm speaking like we have been. We kind of sat on the sidelines for distribution for a while going, I don't know. Does it inhibit your investment in that space a little bit? Or are you kind of waiting for a floodgate to open and like, okay, great, that's solid, now we're going to go deploy a bunch of capital, or you wouldn't be there anyway too much? Well,
so we did. So we're in one
right?
that's already. So and that was we started to see the convergence of the medical regulations here in California and the adult use with the we saw the trailer bill starting to come together and seeing the changes. So there was a little bit of being ahead of that curve, but I mean there still is a lot to be sorted out, and so there still is a lot of opportunity. So there's, so where we are initially doesn't mean that ultimately there's so much more that can get built onto that as that clarity comes through.
Sure.
So, but we do believe, like you said, that there's certainly is a floodgate of capital that's waiting for some clarity there.
Sure. So if you're a founder, how do we, I've got my next big cannabis idea. How do I approach Emily and Morgan?
Well, we have
there
a
might
section.
be some sitting here, actually.
There might be
So.
some sitting here.
Right. We will ask. We'll tap them for questions in a moment. You come to Gateway Open Office Hours when they're on.
Yes.
That's how you get at you.
There you go. I would say that a thoughtful email through our website is always good, with very key punch points about what the business is that you're looking to raise money for. I sometimes get these very dense paragraphs that I'm searching for keywords in to try to find. And then I also think that speaking in strong language but not hyperbole is whenever I see hyperbolic language in the emails that come into my inbox, I'm like, no. Yeah. Because I just think that that's just never going to be the way the business is really going to roll out. So if it's the first or the best, I think revisiting that language, or I mean, it could be the best, but So anyway, that's
it's
something
the
I'm
revolutionary, disruptive, innovative.
Yes, yeah. So I think what I think would be better is to.
Reminded me of an email I've been receiving a lot lately.
Yeah, I think it's great to articulate potentially like, hey, here are some core competitors, and this is something we're doing differently, and that would really catch my attention because. It's just hard when you see hyperbole to really tease through it. So
okay, so they can email you directly on your website. You do actually check that email.
I do. I check it every day. I don't always respond right away. I try to go through batches of responses, but I do read them every day, actually, and I have a special dedicated file for getting back to those founders. I do think there's something to being a founder and reaching out and trying to kind of put yourself out there and raise money, so I try to respect that. So.
Sure.
Yeah, it's a tough road.
It is.
I do want to kind of like break to the audience now, just because
Yeah, sure.
I feel like there's questions out here. I see these eyes staring at us. Who has the microphone? Princessa?
The person always in charge.
All right.
Yeah.
I mean, I've got many questions, but I might just start with sort of the California industry. How much are you looking at the other states, and how much does that really mean to California? And also, what are you expecting to see in California that will mean something for the rest of the country or internationally? So I'm just wondering about your thoughts around the developments legally in the retail market.
You want to take first one? I'll take second.
Sure.
Okay.
So first one being about California.
About other states.
About other
Yeah.
states, yeah. So we certainly look at, we've made investments in many different states, into Canada, into Europe. So we've invested very broadly already. But we look at every single state's regulations, as I was just saying, because that certainly drives the depth of that market, the growth potential of that market, really what the opportunity is there. So, we've done work in Washington, Nevada, Colorado, Massachusetts, Pennsylvania, Maryland, so many states. I'm sure there's more that I can't think of offhand now. But and Illinois is on the list now. And what's interesting is some of these states are coming into the fold that we originally didn't look at, because originally their regulations were not very good. They were way too limiting. Yeah. So the patient growths were super low, or access was super prohibited. And so you watch to see how those start to open up. And that way it can create a lot of pent up growth there, and we're starting to see that in some of these East Coast states that initially came out very, very restrictive and are starting to get more access.
Mm-hmm.
So.
And so I think that because California has been a market for so long, gray or whatever, it's still been a market that exists where people can go to stores and transact for cannabis. I think that the education around it here stands to lead other states and actually other countries about how we experience cannabis here and the things we talk about and kind of the terpene profiles and all of the complexities of the plant. I think that can be something that can infiltrate other markets, and I think it stands to impact how branded products in other markets go about their marketing and the way that they talk about their products. I think it could really kind of change that. And then California's regulations actually do allow for kind of a more experiential market here. So being able to consume the product on site at certain locations, and there's talk of tasting rooms and things of that nature. I think that's something that's going to create kind of an experiential market that can also be drawn into other markets. I think we might be more of a test case for that than other markets have been, which is interesting because we have looked at the trends of what has occurred in Colorado, Oregon, and Washington to really try to pull that into understanding what we could see here as some hiccups along the way. But I think that our experiential market could lend itself to some things opening up in those other markets more readily. So,
Okay, thanks, Jesse. Rich?
Hi, I think it's great that you said one of the fast-growing areas in industrial hemp. I had a company 20 years ago that was making little Oshkosh Bagosh overalls out of industrial hemp and cotton. And I found that we sold throughout North America and several other places, but I found that 95% of my time was speaking about industrial hemp and why it isn't cannabis and all the advantages of softer, stronger. So my question is, today, with all the focus on cannabis, do you think that we always try to distance ourselves from cannabis, and do you think that the focus on cannabis is helpful or distracting from these high quality products in industrial hemp coming not at the concert level but at the Oshkosh Bagosh level?
I think from a potential access to broader distribution, it unfortunately right now it does help to distance yourself, because you are seeing states like New York State where Cuomo has not been very supportive of cannabis, but being very supportive of industrial hemp. And unfortunately, we're still in that environment, which we think is unfair to have to be separated because there's so much together. But for the time being, I think it does help, and that's why companies like I went to see Yvon Chouinard of Patagonia speak, and he was emphatic about hemp and didn't mention much about cannabis, but willing to make a claim on hemp. And so I think that's where you're seeing large corporations that would be supportive of that could be very helpful to funding or supporting that kind of market growth.
Yeah, and I feel like when we're spending time in the hemp field, it feels more like you're almost spending time with traditional farming communities. And I know that they do want to separate, or I've heard from them that they do want to separate from this other movement because they do constantly face that re-education and education path that they have to take. And when I read the notes of what's happening in, like, for example, South Carolina, they're trying to get this really going. It's really a constant discussion of this is not that. And so I do think there is a little bit of separation that can be helpful there.
Yeah. 2 decades, nothing's really changed.
Yeah.
Isn't it? It's wild. Hemp just got totally ignored for quite a while. So.
You all mentioned that investors don't typically talk much about hemp, and I just wanted to know why you think that is.
I think part of it is just what I was mentioning before about with cannabis, there is this very obvious demand. There's a massive amount of consumers that are already there. So the growth rates, can be, especially in cultivation or dispensary, you see them put up some pretty big revenues pretty easily. Where on the hemp side, you are having to develop those markets and develop those channels because they have just been shut off. And so the growth rate right now is still pretty low. We ultimately think it could be massive. We think hemp as a marketplace is a multi-billion-dollar marketplace eventually, especially here in the United States. But it's taking a while to develop those channels, and I think that may be why.
Yeah.
I don't know.
I mean, I think that the feeling that people have around cannabis when they are pro-cannabis is that they really love it. They find it feels great, and it's kind of like being behind something that's kind of like sexy and cool, and that's interesting. I find that when we start talking about industrial hemp, people's eyes start rolling back in their head, and they start losing
cool.
consciousness,
Right.
and they're like boring carbon nanotechnologies. But I mean, so sometimes it's great to get excited about something that not a lot of people are excited about if you're an investor. So.
And then there's a Facebook question. How many companies are into the industrial hempcrete?
Not many.
Hempcrete.
Yeah. It's really okay. So hempcrete, do you want to talk about it?
I only know of a couple here in the U.S.
Yeah.
and then in Canada and then in Europe. But they're over outside the United States. Some of the hempcrete, they're large, very very large scale. But because it's very much a commoditized product, again, it's just people don't think about it as this big sexy story. But they are still massive manufacturing facilities that are producing fiberboard out of hempcrete. Other pretty crude but processed hemp materials.
Yeah, the lead buildings organization, LEED Builders Association out here in California, has focused on it. They've had seminars on it, so I think that it's something that could stand for expansion for sure.
You guys are, while we're waiting for questions, you guys are reminding me, I think, was it Peter Lynch that had the famous investment advice that he loved to invest in boring stuff that people found boring. And so if he would go to a cocktail party, he would, if he described what he was into and people's eyes glazed over, he was felt really good about his investment. He's like, yeah, I think he made a bunch of money in franchising funeral homes and things that garbage, stuff that no one wanted to talk about or look at, right? So.
Yeah.
So it's an awesome investment thesis.
It's interesting.
It can be.
Yeah, it can be. That's right. Yeah.
Another question?
Yeah. So you mentioned the rapidly evolving regulatory landscape around cannabis, and the big piece of that puzzle, of course, is federal descheduling. I'm curious what your sort of operating assumption is about when that's going to happen, and how that assumption affects your investment decisions.
Good question.
It's a great question. That's what we're going to say about it. No.
Spotlight.
Yeah. It used to be the eyes were on 2021. We'll have to see what happens in the next few months. I think I'm on the board of the Marijuana Policy Project, and they're trying to do a lot at the federal level right now because our Rohrabacher FAR, which is scheduled to become the Rohrabacher-Blumenauer Amendment, is potentially at risk. And so for those who don't know, it basically protects businesses that are operating legally within the guidelines of medically regulated states from interference from the federal government. They can't, or they could technically interfere, but they can't really use federal dollars to do it. So it's a little more nuanced than that, but it does kind of protect these businesses in these states. If that goes away, that does give more leeway for someone like the Attorney General, who's not a fan of this industry, to potentially get involved. I would hope that there's a lot of evidence that this industry is performing at its best behavior, and that there's no reason to do that. So, and that the tax revenue is compelling enough. But we'll keep an eye on it. So I'm not sure.
Yeah, I think there's two games, right? There's the short-term game and the ultimate game, right? And I'd hate to say game because this is real life, and people are getting still thrown in jail over this. But from an approach right now is talking about states' rights protections. Making sure that we are able to do what we can to preserve and bolster those as much as we can. And let the industry continue to prove that it is a strong, regulated, jobs-producing, tax-generating industry, and that just will build to that federal piece. The big challenge is obviously in between that period, we're stuck with this banking issue, and that is forcing a lot of unnecessary risk on the industry. So even though trying to stay focused on preserving states' rights because that's what we have to. That still isn't solving that big problem on the banking side. So, that's 2021 is still, if we can get there, that would be fantastic. And at that time, you think about if the industry continues at this growth rate, we always kind of talk about federal descheduling and banking it's either the industry is going to get so big that the banks are going to change the laws, or that the industry is going to get big enough the federal government's going to change the laws, and then there's going to be banking. You know what I mean? It's kind of like they will become together at some point, and we just have to make sure that we can continue to reach that point.
Yeah, I mean, this is business, and I hope that the government sees it as business and it's bringing jobs, online, and there's a lot of opportunities to that. So we'll see. I mean, there's a chance it'll get pushed out, but maybe for an energetics reason, let's keep it at 2021.
So the second part of my question, the reason I was asking about how it affects your investment decisions is that there's a lot of companies out there that have business models that are addressing problems that arise from the current regulatory structure, like, for example, banking solutions, right? Do you view companies that have a business model that will inherently go away at a certain point as worthwhile investments?
So, do you want to go?
I think it's a great question. If you want to start, for sure.
I'll start. We live in a world where data is one of the most coveted resources that exists. I was at the Code conference, and everybody was talking about data. And now data means things that they're collecting from drones, but in our industry, data is the people that are consuming cannabis, the trends around that, and the dollars spent on it. And for a traditional credit card company, I used to do some consulting in that space, and I can tell you there's acquisitions that exist in that space if they feel like they can quickly onboard a whole set of clientele, which will be largely a whole new segment of people who haven't been using their cards to spend money on cannabis. So that could be a very interesting target, but it depends on the form that it's coming in. But and that whole side of the industry is interesting anyway, because we're seeing all the changes around cryptocurrencies and what that stands to mean for these traditional, transaction resources that we've had in the past. So it's actually a really interesting time to be analyzing that. But I think the data behind it makes some of those companies still very interesting as a potential acquisition target, is something to think about. Whether or not we're playing in that space is another thing, and it has to come down to more whether or not we feel like it actually has viability to exist right now and something that can gain traction and be adopted by this market already. So those are a lot of things that we're still considering.
Yeah. And I think your question really is a big question, because it's not just related to potential banking solutions. Because if you think about when the federal laws change or banking changes, and then traditional companies can compete in this industry, the landscape's going to be completely different, right? Well, right now we have this really unique period of time where companies can grow and flourish without having to compete against very large established companies with massive budgets and massive infrastructure. So I think regardless of where you're trying to target in this industry, right now this is the opportunity to build a great company, build a great product, and get market share. Because then market share ultimately is a level of defensibility if you're not able to have something defensible to more traditional companies in a normal marketplace.
And based on the projection of legalization, I mean, you're talking, what, like 4 years still to like build that company.
Yeah.
And then even then, like we've talked a lot about, it's like, just because it legalizes doesn't mean like the curtain falls, doesn't mean banks are going to jump in, doesn't mean insurance companies are going to jump in, so you still have time.
Yeah, I mean, in fact, with banking in particular, I have experience in the sex toy industry, frankly. Here, I'm on the board of a company, and we had trouble banking. It took a long time for banks. It was completely legal, right? But banks have period interest clauses, and they have conservative
Right.
boards of directors. And I mean, ask anyone who's in the porn industry about how to deal with banking and accepting money from customers. They pay through the teeth. People are forced to take hard money instead of regular bank loans for lines of credit and that kind of thing. So my view on banking is even once it becomes legal, the banks will be dragged kicking and screaming into the industry.
Yeah.
Only through competition, because eventually other banks, and as actually some of those bigger players come in, and they say, look, we've been banking with you for decades, and we have, $3 billion worth of assets in your bank right now, and we're going to buy this $100 million cannabis company, and you're not going to shut us down because of it, right? Like that's what's going to have to happen.
Right.
Right. In my view.
I think that's a fair view, because at some point it does kind of have to come from the ground up on that. So.
Yeah.
And I think you're right. I think that no matter what, there's going to be inefficiencies in banking, because it's massive and slow moving, and so I think that there's a lot to be.
Banks aren't
learned from
particularly
this.
innovative. So,
Lewis.
Just kind of, given the nature of the general volatility of how the market's been, how would you say this kind of, as I've seen like in a lot of the traditional investing, equity or otherwise, you hope for some type of liquidation or exit event that comes on. How do you think the volatility affects the performance of portfolio companies that you have, given the general state of things?
I mean, the thing that's affecting most right now is the ability to raise capital, just because the investor mindset can become concerned in these times. But the companies themselves are, I think the volatility actually is kind of helpful, because it does kind of make it less attractive for some of these bigger companies to place a stake in the space. So it gives them a lot of space to continue to grow and flourish. And a lot of these founders are kind of used to the adversity and the ups and downs and challenges. And so it's kind of a condition that they've become familiar with and know how to function in. So I think that that's been good for the actual underlying portfolio companies.
Yeah, and I'd say since we do have exposure on the public side, and we've had to manage through a lot of volatility in the last 3.5 years. I think one of the things we recognize very quickly is there is a direct correlation to that volatility and investor sentiment. When even though a lot of these public companies in this industry are terrible companies that are just abusive of the capital markets, they still are representative of sentiment. And you can tell when there's a general inflation in the public markets, you see an uptick on private capital flowing into the cannabis industry, and vice versa. It's amazing to see how this has happened. This year may be a little bit different, just because as the industry continues to get bigger and bigger, like we've seen more capital in this industry ever.
Yeah.
And
in
the last 6 months, and if you look at what's happened in the public markets, they really haven't done very much. Especially Canada, a lot of those companies have come down 30-40% from their highs earlier in the year. So maybe that correlation's finally breaking down, because there's just more education and understanding and interest to invest in this industry. And we always talk about, as that correlates to the broader marketplace, and when you think about the broader investment opportunities out there, there's so much of that alpha has been competed away in so many other markets. So I think that's why cannabis gets a lot of increasing capital attention. I think that's why you're seeing attention in like the cryptocurrency space right now, because people are seeking for differentiated investment opportunities. And this is an industry that people, there still is that heavy passion element that is way more pervasive than in the cryptocurrency. Like, there's no one that's like, I dreamt about Bitcoin last night. It's
Well,
like,
I don't know that you've met all the cryptocurrency guys. 'Cause
I think they might.
There certainly are those people in the cryptocurrency world.
Okay.
Yes. Yes. Yeah, and Ben stays up all night trading cryptocurrencies.
okay, there you go.
But well, I mean, cryptocurrency was born out of this like very libertarian kind of movement, so it's very philosophical industry, but less passionate than cannabis probably.
Yeah.
Fewer people.
Libertarians
people
are
don't-
passionate people.
Yeah.
I know.
We probably have time for one more question. Does anyone else have a question, or should we wrap it up?
I did kind of have like one, just. Oh, sorry. Was there somebody?
No, go ahead. We'll do two.
Okay.
I think just like on like kind of a more personal level, I know you guys you love all of your investments. Is there like one or two that like really stand out that you're like, I just love the fact that we're in this deal, and can you say like why you really enjoy it?
Can we name names?
Yeah.
Hey, I mean, I actually was going to ask you why you don't name names. Like other investors name names all the time. So
Oh, I never.
Go
I never
ahead,
wanna
pump
push
your
our
stuff.
book.
Go
Yeah,
ahead.
pump-
Say
Yeah.
Flocano was
book.
one of them by the description.
Yeah.
Yeah.
I mean, one of my favorites is this company called Headset, which is a data analytics company, because I was looking for that forever. I come from a world where we used data all the time, and I love having those insights. I think that there's a lot to be dreamt of that come from information outside of data points, but I just think it's really exciting to see it all coming to life. And this one founder from this company called IOSTI says, data has shape and shape has meaning. And I think that if you can take data and make it into a shape that people can represent and understand, I think it can help everybody perform better in their businesses. And I think it's also something that people outside of this industry can look in on and actually see what it represents. So that's something that's really exciting to me. And the team is awesome. They were the founders of Leafly, and then they exited that, and Leafly's doing tremendously well, but now they're kind of, I think they're guys who like to innovate and disrupt, and so now they're doing this, and they're incredible people. So I think it's one of my faves.
They're one of our favorite teams that we haven't touched, because they didn't go through our program. But
Right.
Sai is phenomenal.
He's an
great.
amazing
Yeah.
person, yeah. I mean, they've arguably been one of the longest teams in the kind of tech space of the industry, so yeah.
I think I mentioned one of the companies, a more recent company here in California. It's actually two investments, and one of them is related to this property. And I'm not sure if you saw, but there's earlier this year there was the Fetzer family winery was purchased. We were a big part of that, which is going to create the first dedicated large-scale processing facility in California. And what I think is really unique about that is there's this whole, and we've seen this other markets where there's just this natural power concentration. Like in Colorado, I'm not positive on the statistic, but I'm guessing that the top 10 probably control 80% of the market there. Washington State's very quickly heading that way. California could head that way, but it doesn't have to, because we have such fantastic innovative small batch farmers up north that could be a big part of this entire ecosystem. And this property is helping them, bringing this small batch farmer a shared resource platform that gives them a much more competitive place in the marketplace. And I think the person that really brought this idea together is Michael Steinmetz from Flocana, and his vision of understanding, solving that solution here is just incredible. And I think it speaks to what California can represent for the larger cannabis industry too. That it doesn't always have to be just large scale production, that there can be, more of, when you look at other industries, take coffee, for example, it doesn't always have to be the largest coffee growers and distributors and everything to have a place in the market. You can have really high quality, niche-y coffees that can be a part of the marketplace. And how did they do that is what there's a lot of similarities in what we're doing here in California.
Cool. So really quickly, Jacob, do you have a question?
You kind of answered it, because I was going to talk about processing and a little bit more towards the hemp side, but I'm familiar with the flow kind of thing. But I'm interested where you see processing capability, especially for like industrial hemp here in the States versus where it is over in Europe and other countries, and what the opportunities may be there, because we have to break that plant down to get it into your nanocarbon fibers.
Yeah, definitely. I mean, in Europe, we're seeing a lot of these really massive facilities that are built out to process it kind of in a grosser level, so it's not a coarser level, so it's not getting it very down to that very refined point where you're getting like even like the dusts or the powder that actually can be really useful, and these long, very fine fibers. So that's one of our investments, is this company out of Omaha that's doing that, and they're doing trials for some larger fiber companies in order to test this, and I think that's I imagine we'll have a lot of regional facilities here in the United States, because hemp is a commodity, so then to ship it all the way across the states to one massive facility is not necessarily economically beneficial. So having these kind of centralized facilities in different regions throughout the U.S. where they're cultivating hemp, and then there's groups in Colorado that are pulping it. So there may be kind of different things, but I do think we're going to have this kind of toll processing thing where it's going to go step to step and through to the final stages. What do you think?
Yeah, I agree. I think it has, well, it doesn't have to be, but I think that would be a very smart way to do that, is the regional processing, because hemp is a heavy, dense plant, and, trying to ship it, the economics just don't work. And that's largely why, trying to bring hemp over from overseas is just, it's just expensive. And that's why, I'm sure you could tell us all about what it's like trying to work with the hemp industry. But, I think it just, there's, being close to the source like that just creates the ability to also, there's the innovation in those markets, where if you're closer to it too, and you have the ability to do more R&D in a quicker turn, more innovation can come from that.
Mm-hmm. Yeah, and there's talk of, for example, moving a facility close to a car manufacturing facility, because they are using industrial hemp already in some of the door panels, because it has 10 times the tensile strength of steel when it's done right. Wow. So so having a facility next to a natural byproduct is a great place for it. So
awesome.
Fantastic.
On that note, I think we're a little bit over time, so we should wrap up. The joys of the internet, though, it doesn't really matter. Facebook does cut us off eventually.
Oh,
no. So thank you guys, Poseidon Asset Management. How do people follow you or get in touch with you? Pimp out your website or something. Tell us.
We're at Poseidon Asset on Twitter, and it's PoseidonAssetManagement.com. Very long, but a very clear URL online is our website. And
we're on Facebook. We're on LinkedIn.
Yep.
Awesome. We're
Well,
out there.
thank you, Emily.
Thank you.
Morgan, thank you for joining us.
Thank you so much.
And if you're watching us live on Facebook every Friday, thank you. We are 2 weeks away from our 1-year anniversary. What that means, I have no idea. But if Fridays are inconvenient for you, you can always find us on our podcast, iTunes, Google Play, what have you, YouTube. Just, we're around. So see you next Friday. Thank you guys, Morgan,
Thank
Emily.
you.
Thank you.
It was awesome.